do you get a lot of questions about interest rates and where they're going? Because for the last 6 years, Bob, I've heard the following. Hey, Stan, the Annuity Man, America's annuity agent, interest rates have to go up, right? No, they've gone down for the last 6 years. What are you hearing, and what's your kind of thought and opinion on interest rates? And nobody knows where they're going, but I'd love to hear what your insight is on this.
Yeah, I mean, I sometimes take a look at the Federal Reserve in St. Louis has the 10-year break-even rate, and I think that's as good a place to start as any. Right now it's about 2.4%. So it's suggesting that long-term rates are not going to be much higher than they are. So I think people have to sort of use that as your benchmark and say, I'm not going to go too far out. I mean, at the moment, right now, the day that we're recording this, we're watching the yield curve flatten out quite a bit. So, short rates are rising, but long rates are sort of holding steady. So that's sort of an indication that inflation is not really, a long-term event at the moment. Now, I wouldn't necessarily be buying long bonds, on the odd chance that, interest rates do continue to rise. But I'd say this is as good an indication as any as whether, where you should be thinking about putting your money. If you're, and I just got off a call, it's just Stan, with a dozen investment professionals, all of whom were talking about why would anyone invest in fixed income at the moment? It provides no yield on the short term, it provides no yield in the intermediate term, and no yield in the long term. And so these folks, a dozen investment professionals, some of them with the largest, financial institutions in the country and the world, are grappling with where do you put money if not in fixed income at the moment. And I think that's a really interesting, question that average folks have to deal with, as well as institutional investors.
I agree with that. I mean, there's many types of annuities, so I always laugh, and me and you have joked about this, that I hate all annuities. It's like saying I hate all restaurants. There's many types, but one of the types that's really popular right now with us is these multi-year guarantee annuities, which are fixed rate annuities that right now you can get a 5-year piece of paper that's yielding 3% annually. That sounds horrific when you think back to Jimmy Carter, but right now that's not bad because of the dynamic pricing model of life insurance companies. They can back up that 3% yield. But I understand, having been, and you and I both been on that side of the table as financial advisors, masters of the universe, that we're trying to figure out how to, does it make sense to lock in a 3%? I mean, I don't know, but what I have, and I think you're dealing with this as well, there's 10,000 baby boomers hitting age 65 every single day. That's a demographic tidal wave in my book, and I'm sure yours as well. Do you think that this interest rate range that we're in, is this the new normal?
I think it's the new normal for at least the next, let's call it 5 years.
Okay.
Right. And I think, that's as good as a horizon as any. I think if I'm talking to a retiree who is now retired and worried about how am I going to generate income, I've become increasingly fond, Stan, of the bucket strategy or time segmentation.
Yep.
Where you say, and forget for the moment, 4% rule, right? Everyone loves to talk about the 4%.
Yeah, please, let's get rid of that.
Let's get rid of the 4% rule. Right. So let's take, for example, you say, okay, let's use the bucket strategy. And I'm going to put, 1 to 5 years of my living expenses in something that is safe, might be low yielding, but it's not going to be at risk. And then I'm going to put the next 5 to 10 years of my living expenses in another tranche. Maybe it's a balance fund. Maybe it's something that you have an idea on what to use. And then, your 10 plus year money is going into something perhaps a little bit riskier. And then as you go through retirement, as you're going through the belly of the snake, well, each year you're peeling off a year from the other bucket and bringing it in forward to the next bucket. That way, you really don't have to worry about a couple things. One, what the market is doing day to day, right? Because your living expenses are taken care of for the next 5 years. And then secondly, you don't have to worry about the 4% rule because you're not pulling from your portfolio per se, right? You've already pulled from it. And actually, you've pulled more than 4%, right? You've liquidated a year's worth of investments to fund year 5, let's say. So I've become increasingly fond of this strategy because I think it takes a lot of the worry out of what the market is doing and where you're going to find yield, right? If you're thinking about, well, I need yield today, well, you should take that off the table, right? And say, what I'm producing today funds my living expenses. And then years 5 through 10, well, it's in a balance fund. So it's going to be more at risk, but it's going to be perhaps diversified to the point where it gives you a lot better yield than maybe say 3 or 4%. And maybe the upside potential for 10. I'd be curious, Stan, because I have gotten lots of questions about a relatively new product called RILAs, and people are looking at these as well, having my cake and eat it too. And
Mm.
in terms of it being a 5 to 10 year or 10-year plus investment, is that something that I'm going to throw it back to you? Is that an option
Well,
for folks?
it's a registered product, so I'm not at liberty to comment on it, and I don't want to comment on it in the podcast. We can certainly get that information to people if they want to contact us. But in a I'll answer it like this: anytime there's a low interest rate environment like we are in and we have been in, that's when brokerage firms and life insurance companies start getting creative and creating products out of midair that sound too good to be true and typically contractually are not once you look under the hood. What I would tell people is just be very, very careful on your hopes and dreams because you're going to own contractual realities.
Hey, Stan the Annuity Man here. Did you like that little taste of my podcast, Fun with Annuities? Hey, if you want to see the full version, click the link and watch the whole darn thing. Remember, Fun with Annuities. Live in the reality, not the dream.